All right, yo, we are here today for a different kind of video. This is going to be a trade review, but I'm only reviewing one single trade. And the reason for that is because it's going to be kind of like half trade review, half educational video. I really want to go over the setup itself, how I identify it, and a handful of other quick things to note. This is something we've been covering in my streams, and this is a really good example, so I thought it was worth going over it from a purely rotational PA and like volume perspective. A lot of what I'm talking about you'll be able to see through order flow. You can look at Agar, but I'm just gonna focus on what's on my template and what's in front of you, and I'll try to make this as straightforward as possible. And we'll start with this first thing that I did right here, which was to mark out every single start of the session as you go through your day. And the reason that I did that is because I've been talking a lot about different market participants and how different regimes are set throughout the day as you reach different time zones. And this is the easiest way to see it. So if you were to really just zero IQ this, you get your start of Asia session. From there, we largely just range. Now, this is a little bit complicated because there's always that kind of like daily imbalance, and then that always creates the risk of starting a new regime, which it often does. So it gets a little bit tricky here between the crossover between your previous day and your next day. But aside from that, you have your very clear pattern. Past that, London session on this day was very clearly in an uptrend. We spent the large majority above the mean, crabbing between the 1SD, the 2SD, pushing outside of value a few times, until ultimately going into New York session, we ended up bleeding. And then, of course, New York, as it always is these days, we chopped a little bit, turbo bled, and then just created this like prolonged controlled selling until inevitably you got your clean momentum loss pattern going right back into Asia and then ultimately into daily close. And that is fundamentally what I want to talk about. I want to talk about the momentum loss trade. I've already done quite a few yaps about this, both in the group and on Twitter, but I think this is a really clean setup to learn. It's really easy. And if you have the right tools, you can really train yourself to identify it. And even without the right tools, just from a PA perspective, you can more often than not kind of see it coming. And so let's get into this trade review. So like I said, we opened the day balance, trending, New York, just blood. I mean, this entire session pre-New York open over here, leading all the way into basically the end of New York, an hour and a half before US markets close, was just bleed. That's all you got. And ultimately, throughout this pattern, you actually got quite a few momentum loss setups. There's one right here. There's arguably one right over here. But the one that I triggered was the final one, and there is a specific reason for that. And the reason specifically is the confluence between price, rotational bands, OI, and volume. So let's get right into it. The classic momentum loss pattern, the one that you've heard me talk about, I'm sure too many times at this point, is price is bleeding. It ends up ripping down. We reclaim a little bit of it, and then that speed kind of peters out and you start to just range until you ultimately are hoping to take it higher. A very simple way to identify this is to draw a very simple range over here past your point of climax, and then you can clearly see the range and you try to trade it accordingly. Now, if you're a scalper and you really want to be trading these like very small moves, well then here's your opportunity. You short here, you long here, and you continue to play the rotations as long as they work. Now, of course, this doesn't always look picture perfect. There is more often than not a deviation, and so price will do this, reclaim the range, and then continue to crab. But ultimately, I've said this before, I'll say it again, there are three ways for you to play momentum loss. You either A, bid the deviation, which is the higher risk scenario, but also gives you the best invalidation. Because if you're wrong, you'll know that you're wrong immediately. If this makes a lower low past your wick, past the level that you bid, well then this is most likely not a range and you need to reevaluate your trade setup. Next, what you can do is once you are comfortably in a range, well then option B is to try to bid at the lows of the range, ultimately looking either for a move higher or an ultimate reversion back into the mean. And then finally, option C is bidding the retest of the range high. Once you've broken out, you've already confirmed that price is on its way to move back into the mean, well then this is basically your final chance to trigger into the move. And of course, these are sorted by essentially your RR, because this trade here, option 1, will have the best invalidation and therefore the best RR for your trade. Option 2 is a little bit worse because it's possible that you create another deviation and reclaim, so you'll have to hold through a little bit of pain. And then of course, option C is ultimately the worst one because this could be a fake out. You could trend back into the bottom of the range just to ultimately push back up and break out and complete the move that you were looking for, but you'd have to sit through this entire downtrend first. And now let's apply this exact same pattern and look at it on this trade. So like I had said, we bleed all of New York. We get essentially a repeat of quite a few momentum loss patterns. We just don't get that full rotation back into the mean. But here is your high effort puke. It pushes outside of value. It creates a range. Speed starts to stabilize a little bit. Unfortunately, this one failed. It wasn't able to crab back up. It creates another climax move, bleeding into a pretty significant SR level for me, pushing outside of value. It creates another extended momentum loss range. These are all tradable moves. And then ultimately you get into the final one, the one that I decided to bid. And the logic is very simple. It's because we get our high effort move, which at this point is the highest volume candle of the day. But more importantly, opening right into the lows. They're already outside of value. We're pushing into the 2SD band. We're pushing into the weekly 2SD band. And people are ballsy enough with some size into these levels. And that is my opportunity to try to revert this move. And so it's actually funny that I'm covering this example because I didn't play it this well this time around. I ended up taking a scratch ultimately because at this point here, I went to the gym. So I set a stop loss for new lows, assuming that this was the range and that we'd be creating only a single deviation. So I didn't even perfectly listen to my own lesson. I ended up getting stopped right over here on one of the trades just for it to ultimately run, but that's fine because often the way I'll play momentum loss is I have multiple accounts and I'll run the trades several different ways. And you can see that right over here. You get that climax candle, it pushes back up. My first trade, the intraday trade, the one I'm willing to sit through some drawdown because I know that ultimately this will play out in my favor. I send it on the reclaim in the off chance that we get a quick reversion move. That's obviously not the case. I ended up sitting through quite a bit of drawdown before this ultimately played out. For a pretty simple rotation, essentially from the weekly 2SD into the weekly 1SD, I wasn't really targeting the mean this time around because we were extremely weak and there hasn't really been a lot of strength this entire week. So it didn't make sense for me to be looking for extremely high targets. I just wanted to keep it rotational within the weekly bands. And so then I sent my second trade, which was ultimately going to be a scalp, playing it from the daily 2SD band to the daily 1SD band. This is the one where I set a stop. Unfortunately, I got stopped out. That's completely fine. And then for the third trade, I was looking for that third scenario, the retest of the top of the range moving up. But on the way up this time, we actually had quite a bit more strength. And so I didn't get that perfect retest. I had to trigger into the reclaim of the SR level right over here, which turned out to be very good timing because we got a high effort candle almost immediately. I didn't have to sit through any drawdown and it pushed right into that final rotational level that I was looking for from the weekly 2SD to the weekly 1SD. And as you can see, part of what pushed us up, most likely a lot of the same people who opened into the bottom. And really, in a nutshell, that is the momentum loss setup. Now, I've done more education on this. I'll continue to do more education on this. I'm happy to cover this on my stream again and in future trade reviews because this is a trade that I take very often. But I really just wanted to cover this one simply step by step with the general pattern that I trade and then the real world example so that you can really clearly see what I'm looking at. So I hope you guys enjoyed this video. I hope you learned something. I hope you're having a fantastic weekend. And if you want to learn more, learn from the people who taught me how to do it, well then come hang in the Paragon. It's a great time. Peace.